Now, did any of you catch the elections last week? I think it was really, really amazing event. It's like what's happening to the world. I don't want to turn this webinar into a political webinar, but it is a good lesson for every trader out there. Now, just a quick check, quick show of hands. How many of you were actually caught by the moves during the election? Was it last Wednesday? Yeah, last Wednesday. How many of you were caught by the moves? Or how many of you were even trading? Any of you? Leonard said he was lucky. He made 3,000 pips. That's awesome. Fantastic. Yeah, Cynthia risked all. Sebastian. Pocket money, John. Hey, it's still good money, isn't it? Okay, I mean, it was really crazy, isn't it? Because I mean, I came to the office in the morning and Clinton was leading the polls. And then, so when Clinton was leading the polls, let me just bring up the charts since we're talking about the markets. Let's see, dollar yen. Okay, so basically when Clinton was leading the polls, right? So this was the dollar yen chart. Okay, so basically when Clinton was leading the polls, you can see that dollar yen was actually moving upwards. I think somewhere, which date was that? 18/9 November. Yeah, so it was this whole uptrend move. In fact, prior to the polls, right? Um, the market was actually pricing in a Clinton win. So you can see dollar actually moving higher and higher, and yen weaker. So basically, it was risk on mode on Monday, on Tuesday. In fact, even before the election week, it was risk on because everybody was pricing in a Clinton win. And what happened was that in the morning, I think about 10:30, 11 a.m., I think some states came out and Donald Trump was actually leading. And that's where you see the market turn. And you see this long spike. What happened was that dollar yen actually fell all the way from 105. And when it breached 102.50, right? You know what? Let me bring out maybe the 8-hour chart. Yep. So that at least you can see the big red candle there. So you can see this was the pre-Clinton move over here. Okay, this was the Donald Trump initial reaction. All right, this red candle when he was leading the polls, I think about 10:30, 11 a.m. in the morning. So it went down, and it makes sense. I mean, Donald Trump is a big question mark in terms of what he might bring to the leadership. And basically, a lot of traders were a bit more risk averse because, and when risk aversion come into the markets, yen was strengthened. Okay, yen was strengthened because there's a lot of unwinding trades as well, unwinding of the carry trades as well. So it came down, and when this happened, right, it gave me the similar feeling of Brexit. All right, similar for Brexit, whereby at first the group to remain the Bremen, right, actually was leading, and then Brexit, the group which supported Brexit came in, and the markets reacted to it. So when Donald Trump took the lead, dollar yen actually came down. Okay, and I thought this was just a short-term move, because the last few states, right? I think like was it Florida or California? Yeah, the last few states they predicted a Clinton win, so I just thought it was a short-term thing. But in the end, we all know who won, Donald Trump. And what happened after that really caught a lot of people by surprise. A lot. Really a lot. Yes, John, all hell broke loose. Simply because the market totally reversed. And all the analysts, I think I read a lot of reports, and I'll say almost all the reports that I read from banks, from research houses, from brokers, were expecting dollar yen to drop further if Donald Trump wins the election. Okay, in fact, some say that it might go to below 100. Now, dollar yen 100 level is very key, isn't it? Some say it will go below 100. So the initial reaction was so-called correct. The prediction was correct. But what happened the next day was really, really amazing because the whole move, the whole initial reaction of the Donald Trump move was actually reversed. And if you look at the 4-hour chart, right? If you see the 4-hour chart, you can see that this whole red candle was reversed. Now, some of my clients and some traders I know actually took shots over here. Okay, now do you think it's a good shot? It was a nice big red candle. There was a candle close below the key support around 102.50. For me, 102.50 was line in the sand. And when it retraced, some traders took a short here. Now, what do you guys think? Do you guys think that this is a good place to short? Yeah, I agree, John. At the moment, it might be. Okay, because it makes sense. I mean, fundamentally, it makes sense in terms of risk aversion. Technical-wise, it makes sense as well because it seems that the trend is changing the downside after this big red candle and the market closed below 102.50. Okay, 102.50 for me was key because if I go back to the daily chart, right? Okay, you see this line I drew here? This was 102.50. And of course, now we know there was a big shadow here, but if you if you were in the 4-hour charts at the point in time, if you see that the candle closed below 102.50, okay, chances are that you think that it will go back to the previous low at around 100 or so. Okay, so let's go back to the 4-hour chart. So if you took a short there, it's a decent shot. I mean, not really my cup of tea simply because it was still very volatile at that time. I think this was in the afternoon, just at London open about 3-4 p.m. Singapore time. So if you took a shot there, it was a decent entry. I mean, based on if you have a trade plan, it was a decent entry. But what happened was that the whole thing just reversed. And these are the kind of markets where it reiterates the point that the market is absolutely random. Okay, the market is random. And it really can do whatever it wants to do. Okay, and as a trader, right, especially as a retail trader, your job is not to fight against the market. I've been repeating this in all my webinars. Do not fight the market. Look at the charts. If you're wrong, get out. So some of you who took shorts here might get stopped out, which is fair play. I mean, it's part of trading, isn't it? Being stopped out. But a lot of people got hit or are still bleeding actually because they are still trying to hold on to their shorts here. Even after the whole move reversed and it broke the entire bearish candle here, even though it broke above the 105, I know traders and I know clients who are still holding on to the shorts. In fact, they're adding on to their shorts because they cannot let go of their fundamental belief that a Donald Trump win means dollar yen will fall. And that is very, very dangerous when you're trading, okay? Because such a mindset can kill you. Such a mindset can actually blow your account. And it's just failing to accept what the market is. And I mean, if you look at the trade, you look at the charts, a lot of the markets are doing the same thing. It's not only dollar yen. I just use dollar yen as an example, but if you look at the indices like S&P or Dow Jones especially, if you look at other yen pairs, if you look at euro dollar, if you look at pound dollar, everything just reverse. Okay, and this is a perfect lesson. It's definitely a painful lesson for some, but it's a perfect lesson to tell you that the market will do what it wants to do, and your job is just to follow it. Yep, John, it is a painful experience. Like we all been there. I've been there many, many times. Trust me. So just a case in point. Now it's not wrong trading in news. It's really up to you, up to your risk appetite. But you need to be flexible when you're trading in news. You need to be very, very disciplined when you're trading in news. If you find that you're not a disciplined person enough, then just move on. Don't trade the news. All right, let the thing happen first. And for those of you who were actually flexible enough and saw this reversal, was actually able to maybe enter a pullback on this level here. Of course, the hindsight is easier, okay? I was tempted to enter along here, but I didn't because it was just the day before the elections. It was 10 November, 8 a.m. I just wanted to wait out. Okay, so I missed this move here. But you can see that the whole move was reverse. It broke a new high. You see this is a new high compared to this high. It actually pulled back and it continued upwards. Okay, on hindsight, yes, it looks like a perfect trade. Okay, I didn't take it because for me it's still the next morning of the election. I still wanted to wait and see what happens, and the thing just really pushed on further and further and further. Okay, so that was the story of the elections. Really, really interesting. I think Brexit was the same story as well. Brexit was exactly the same story. It's just that for Brexit, the pound move was more predictable because the pound weakened, kept weakening even days and weeks after Brexit. But a lot of the indices really tricky. Just when you think the major correction is coming, oh, finally the correction is coming they've been waiting for the past 5 years, finally it's coming. Just when you think that, the whole thing just U-turn. Okay, so since we're talking about that, let's just start with my indices. And if you look at indices, I'll move on to FX in the second half, yeah? And if you look at indices, right, you look at Dow Jones. Look at the Dow Jones weekly chart. Holy crap, look at that. It came down. Okay, it came down to this support level. Sorry about that, sorry. It came down to this support level. let me just draw some lines here, sorry. Yep, at 17,005. Okay, you know why this support, right? You see support here, support. So 17,005 for key support, it came down and then the whole thing just reversed and shot up and actually made a significant higher high above the previous high. The previous high was around 18,600 or so. Okay, this is a previous high. Now, very interesting that if you compare the Dow Jones and S&P, all right, you would see very obvious that the Dow Jones is actually much more bullish. I mean, you see Dow Jones had actually broke a new high, but if you look at the S&P, right? Let me just bring up S&P here. S&P weekly chart. Okay, S&P reversed as well, bounced off a key support area around the 2030 level, but it still has not made a new high. It's still within or below the August high of around 2200 or so. Okay, so if you were going to be bullish on the index, on the US index, which one do you think is a better one, S&P or Dow Jones? Firstly, you all know why the Dow Jones is more bullish than S&P? For those of you who are new to the webinar, you can, just feel free to type the chat box, in the question box, sorry. Yeah, I mean, it's good to have interaction in the webinar. If not, it'll be very, very boring. Trust me. I've been through many webinars before. Yeah, exactly, Raju, because Dow Jones made a higher high. But the fundamental reason why the Dow Jones is actually more bullish than S&P because Dow Jones is only 30 companies and is more lean towards financials and industrials, all right, which kind of support some of Donald Trump policies. Yeah, components and Dow, exactly, Cynthia, spot on. So if you were bullish on the US index, I would look at the Dow Jones rather than S&P because it has made a new high. Okay, it's made a new high. Just be a bit careful because if you look at the weekly chart of the Dow Jones, there's a bit of a divergence. You can see a lower high here, but it made a higher high. Okay, but if you are intraday or kind of trader, it's still possible to plan for long trades because this is a weekly chart. The weekly chart is kind of long term. And if you look at the daily chart, beautiful, higher high. So it's a very simple trade plan whenever a market make a nice breakout to the upside. Simply what you want to look out for is for the market to make some kind of pullback and continue to the upside. Okay, what I like to do with such markets is I wait for a pullback, okay, and once I reach my area, so my hot zone I would say is anywhere around the 18,700 or so, okay, 18,700 or so. So once it comes to my area, I would go to the shorter term time frame and I would try to plan the trade up, and my first target with the previous high, which is around 18,008, 18,009. Okay, so this is the level I'm looking out for. This is a daily chart, looks very nice and bullish. Look at a 4-hour chart, also nice and bullish. In fact, some of you who were sharp enough, you could write this little trend on the shorter term charts. Okay, especially this little move here. Again, on hindsight is easy, yeah, and I'm talking based on hindsight now, but I just want you to be aware of where the entries and exits you have taken. Okay, so this was a reversal. It broke the high. What was the previous high? Sorry, let me just go back to the daily chart. So the previous high was 18,006, right? Let's put 18,006. So if you go to the 4-hour chart, okay, if you go to the 4-hour chart, the 18,006 level is basically here. Okay, so if you were sharp enough and you saw the whole reversal and made a higher high, so 18,006, this line I draw here, this is a key level because it was an all-time high. It made this high was in August and it has broken. And look how the market pulled back exactly to the previous resistance turn support. Look at how it pulled back. Beautiful. Okay, really beautiful, and then it just continued on. All right. In fact, this was a second entry. This is a shorter term kind of entry. All right. And if you miss all this, then the question you need to ask yourself is it a good time to continue buying? Okay. Now, what you want to look out for is all this because it looks so bullish, right? You could have got in on 15-minute kind of entries, but just be very careful. The closer we get to 19,000, okay, the bigger the resistance. Now, the thing about such charts is that because it's all-time high, right? You can't go to like a longer-term chart to plot resistance. You can't find it. So that's where you look at whole numbers, okay, like 19,000 and things like that. So just be very mindful when we hit close to 19,000. But there are a lot of short-term buy opportunities here. But what you want to look up for is if you go to the 15-minute chart, okay, or let's say go to 1-hour chart, sorry. You want to be wary of shorter-term charts to see whether there's still momentum to the upside. Now, what the chart has done here, this is a 1-hour chart, okay? So it has made a higher high, higher low, and this is what I call a lower high. And a lower high is the first sign that it might start turning downwards. So on the 1 hour, a downtrend might start, but on the daily chart, it's actually just a retracement. And remember that 18,006, that was a key support level. So my long entry, or the entry that I'm looking at to continue the trend, is somewhere around the 18.7 area, which I mentioned based on the daily chart. So this area here is called a lower high. Now, for those of you who are not familiar with price action, this webinar is specific. This webinar is specific to live market analysis. I will be conducting a price action webinar next week. I think my marketing has not put it up on the website, but if you're keen, because I thought that because I've been doing a live webinar every week, right? Some of you who are not familiar with price action might really get lost. So I thought of covering some price action and some basic support and resistance next week on the 24th of November. It's a Thursday evening, same time, 7 to 8, but this one I put it longer, so 7 to 8:30 p.m. Okay, so for those who are new, if you want a bit more in-depth on price action, that one I won't cover much live markets. I cover more on theory. Okay, but anyway, I'll repeat that again at the end of the webinar. But so if you look at 1 hour chart, so you can see that 18.6 was broken, right? I'm going to lower term time frame for the benefit of intraday traders. So you can see that 18.6 was broken. See here. So this line here was a key level. On the 1 hour chart, you probably can't see why it's so important, but if you go to a daily chart, you can see why 18.6 is so important. So that's why it's very important to use different time frames to tell yourself what's the trend. And when you see the 18.6 broken, this pullback was beautiful. Okay, this pullback was beautiful, exactly back to the previous support. So back to previous resistance turn support. And then it pushed higher. Okay, and this one here as well. You see how it came exactly back to the previous support turn resistance. And in fact, you could have, yeah, this one is not that nice. But right now, what he has done is that he has made a lower high. A lower high is the first sign that the market might start turning downwards on the 1 hour chart at least. So what it might do is that it has made so this is the market making higher high and then followed by a lower high. You compare this high, so this is a lower high. What it might do, it might start consolidating, something like that. Or, this is a second example, again, lower high here compared to this high. So number one is that it might start consolidating. Number two, it might start coming down, maybe to a bigger level of support before the higher term time frame takes over and push higher. This is scenario number 2. Okay, nothing new. I covered this in a lot of webinars. So this is a kind of heads up on the 1 hour lower high. Now some of you might ask, will I plan to short? My answer is no. It's just not my strategy. I met traders who are so seasoned where they can do trend trading, counter trend trading, scalping, intraday, swing trading. Do I aspire to be like them? Absolutely. Am I there yet? I don't think so. Okay, I did try doing a few counter trend trades in this few months, and I screwed up quite bad. So I really just want to stick to what I'm familiar with. Yeah, and trend. If you're a trend trader, I mean, it's just how you condition your mind. I tell you, psychology is the trickiest part of trading. Psychology is really, really tricky. So you need to find something that you're very comfortable with. Okay, so that's Dow Jones for you. So just be mindful of this lower high. Let me go back to the daily chart. Okay, so I always use daily charts as my reference, and for me, the Dow Jones is still looking good to the upside. I'm just be a bit more patient. All right, so that's Dow Jones. S&P, similar thing, except that it's not broken a new high, so just be a bit more careful. Let me go on to some of the indices like the DAX. John, it's a webinar. It's not a classroom. I think webinar is more accessible to people, isn't it? Do you prefer classroom or webinar? I don't know. It's a webinar anyway. So this is the DAX. And the DAX weekly chart, still not that trending, a bit consolidating. If you draw a resistance, it's very, very obvious that the resistance is around the 17,800 level here. See here? Very, very obvious resistance. Yep. And what you want to do is, I'm putting alarms above here, because if you break the 10,800, it tells me that it's very bullish. It's looking good upside. Okay, so this is a weekly chart. So the weekly chart to me is a bit bullish, but it's consolidated since August. All right, just bouncing around the support and resistance, and even the elections could not break through either side. Right now, the momentum is slightly towards the upside, and you want it to break the 10,800 clearly first. Going down to the daily chart, you can see that it's a bit messier. It's just one big consolidation. Not looking to touch the market at the moment. I'm just waiting for it to break the 10,008 before deciding maybe and looking for long opportunities to 11,000. Okay. Some of you might say, I mean, if you want to be a bit more aggressive, right? This whole reversal, all right, seems quite bullish. Pay attention close to where we are right now, around the 10,640 to 10,660 area. Okay, because this is a short-term support, and it might just push up from here. Okay, if you're a bit more aggressive, so it has reversed quite a bit. It might just make one more peak down, and then it will break up. Possible. Yep, but just look at this area here. I think it's clear on the lower term time frame. Let me just bring that up. 4-hour chart. Yep. Okay. So the key resistance is 10,008. That's the ultimate resistance for the DAX. Okay. Couldn't break it for the past few months really. But if you draw another line here, you can see that this levels here was also presenting quite decent resistance and support. See all this bunch here. Here. So it might it might mark around here, and then from here it might just shoot up. Possible, if you're aggressive. But if you're more conservative like me, just let it break 10,008 first. Okay, I'm not looking to short because there's no trend to the downside. There's no trend to the downside. I'm looking for a bullish opportunities on the DAX. All right, so that's the DAX for you. Let me just go back. What else? Where we are? Let me move on to Asia side of things. If you have any indices that you want me to cover, please shout out there. Do you use Elliott Wave? I don't. I use price action, which is somehow related to Elliott Waves. But I don't. And for me, Elliott Waves is a bit too discretionary, just not my cup of tea. Yep. Foots. Okay, I got some requests. Zahid, you want Nasdaq? Sure. Let me bring up my Nasdaq. US Tech 100. Okay, so let's start the weekly chart again. Weekly chart. Definitely not as nice as the Dow Jones. Okay, still bullish, but you look at the weekly candle compared to Dow Jones. This whole big, you can call it a huge doji candle or whatever candle you can call it, but it signals indecision. Okay, it signals indecision. So it is still, it's a bit more consolidating now because it has been bullish, but if you draw the support and resistance, right, you can tell that the key support is around the 4650, resistance of 4900. So it's a bit sideways. All right, and if you go, let me see if I can draw a trendline support here. Okay, and yep, something like that. So weekly chart is consolidating. Nothing much, not much direction. It's a bit more bullish to consolidating, I would say. Let's go to the daily chart. Daily chart is sideways, and if you look at if you look at the other indices and the rally that is happening, right, and you look at the Nasdaq, I wouldn't pick this index to trade if I'm bullish. It's just very sideways. Okay, I mean there's so many markets for you to choose from, and IG as a broker, we offer so many different markets, from commodities to indices to FX. So pick your trades, take your pick. It's like walking to a candy store and seeing what's the best candy to eat. Literally, because there's so many markets, pick the one that's easiest to trade. All right, try not to get stuck in. I mean, some traders like to stick to their usual few. It's not wrong. Okay, it's totally fine. But you got to be patient if you're doing that, because if you just stick to a couple of markets, right, they're not setups all the time. Cynthia, you say, is it making higher low and lower low? Yeah, when it's making higher lows. Wait a minute. Higher lows and lower. What do you mean, Cynthia? As in lower high and lower low, is it? Do you say, are you referring to lower high and lower low? I mean, when it's making a mix, or lower high and lower low. No, not really. Oh, I know what you're talking about. You're talking, this is a lower low compared to this, and this is a lower high, right? Okay. Yeah, I know what you mean, Cynthia. So Cynthia's question is this, so she's saying that, is this considered a lower low and lower high? For me, not really, because in the context of a daily chart, it's actually just consolidating. It's actually just consolidating. Okay, so even if we are around here, right, okay, I wouldn't dare to short because it's not a clear trend. If you look at the bigger time frame context, it's just a big fat consolidation. All right, so Zahid, right? You're asking for Nasdaq, so just pay attention to the levels here. So for example, support is around the 4650, resistance around the 4900. Now, if you're a shorter term kind of trader, right, Zahid, let's say you go to 4-hour chart, okay? Even if you're shorter term kind of trader, I really don't see much here. Yeah, and I don't like to force a analysis for the sake of it. I don't see much here. So whenever I see a chart like that on the short-term charts, right, I tend to just go to a high-term time frame. And with the high-term time frame still don't give me much room for analysis, I keep on going higher till I see something I like. So for me, Nasdaq weekly is the clearest. Other than that, it's really mixed, and the probability for trade plans are quite slim. I mean, looking at a 4-hour chart, really mixed. See, there was a nice reversal, which happened to almost of the indices after Donald Trump won, but the thing just came down, and this is really a mixed bag. Nothing to trade. And you look at the moving average, really sideways. All right, so just use the daily chart and weekly chart for reference ahead. Short-term intraday kind of setups, nothing. Maybe for longer term kind of trade, you want to look at the support and resistance level of the daily chart first. Okay, Zahid, all good? Okay. What else? Winston, FTSE. Okay, let's see. Okay, so let's go to the FTSE again. Let's start the weekly chart. Okay, so this is the weekly chart, and where are we? Very mixed as well. Look at the big doji candle here. No, really indecision as well. Big question now. What do you guys think? Is this a considered lower low? Let me just delete some. Okay, is this considered a lower low? This one here? Okay, you may I cover Nikkei soon. Nikkei and India, right? Okay, so is this considered lower low? What do you guys think? Lower low compared to this? This is a weekly chart, by the way. So lower low is a sign that a downtrend might come. So the question is this circle here considered lower low compared to this? Raju says no. Any others? John says yes. Chong says no. Leon says no. Okay, majority is no. Raju said daily, maybe yes. Okay, okay. Now for the weekly, right, the fact that there's almost 50-50 answers, right, means it's not obvious. And the fact that it's not obvious means a lot of traders are not sure. And if they're not sure, means the move is not obvious, means stay away first. That's how I see it. Okay, if all of us say it's a clear downtrend or uptrend or clear lower low, the move is obvious to you, means the move is obvious to me, means the move is obvious to a lot of big traders, then it's a high probability kind of setup. But for this case, it's a mixed bag. Okay, because you can draw a support line here. Okay, you can say that, oh, it's supported. And the 6,006 level is good support. The election simply pushed below, but the candle couldn't close below. Therefore, it's still consolidating. For me, based on my analysis, I say it's still consolidating. It's not lower low yet. Okay, but just messy. It's really messy. Exactly, John. Exactly. There are many clean charts. So it's still consolidating. I'm not surprised you make a push back to the high near around the 7,000 level, but weekly is consolidating to me. Going to a daily chart. So the support is around the 6,006. Okay, the daily chart is even more obvious. It is consolidating. And right now, in the middle of this big fat consolidation, I do not like to get involved at all. Yep, going to the 4-hour chart. Ew, disgusting. Okay, I hope you guys know what I mean by when a chart is ugly. Okay, trust me, it'll get you out of trouble. There's no point trading ugly chart. There's no flow at all. So this Nasdaq and FTSE, both very mixed to me. Wouldn't want to touch it. Okay, just be very mindful of your key support and resistance levels. So for support, it's around 6,006. For resistance, around 7,050 or so. Put your price alarms at either side and just let it go until your price alarms trigger. Because in between here, there's really nothing much to do. Okay? I hope that helps. Who was asking for FTSE just now? Winston, right? Is that right? Okay, Chong, you asked for India. Let's see. Nifty, right? Yeah, sorry. Okay, Nifty, interesting. I think the first time I covered Nifty in a webinar. Okay, wow. Now, Nifty looks bullish to me. Let's see. Let's plan something. Yeah, supports. Yeah. Okay, we are at decent levels. So Nifty, this is the uptrend on weekly chart. Okay, high, low. Significant support is where we are right now, around the 8,000 to 8,050 level. We are near support. If you go to the daily chart, okay, daily chart is coming down. daily chart is coming down. Okay, so what you want to do, right, Chong, is if you are looking at the weekly chart and seeing that support where it will push up from, pay attention to where we are right now, anywhere near this level, near the 8,000 level. Okay, right now the daily and weekly chart is telling two conflicting stories. You want to be patient. Okay, you want to see a bit more support being shown here, and then when it starts moving up, then maybe it will continue the weekly trend, maybe at least back to the previous high around 8,005 or so. Okay, but this level here is pretty key support to me on the weekly chart for the Nifty. If you look at the 4-hour chart, yep, daily chart is down, 4-hour chart is down. So just be patient if you're bullish. Are you bearish, Chong, or bullish? You're bearish. Okay, if you're bearish, if you're not enter any position, right, there might be still some intraday shorts that you can take, but just be very mindful that this level here, based on the weekly chart, anywhere between 8,000 is a key support level. Okay, you do not want to be shorting to the support level. So if you are looking for more intraday setups, it's still bearish, momentum is still to the downside. Any retracement, you can still take it down, but the closer we get to 8,000, be a bit more careful because that's where a lot of bulls are waiting. Okay, Chong? I'm more of a intraday to swing, so I'm looking more towards the bullish side around 8,000. But I guess I gotta be patient because right now the intermediate time frames are still bearish. Yep. Okay, cool. Any other index you want me to cover before I move on to FX? Oh, Nikkei. Sorry. Nikkei. Where's my Nikkei? Copper, is it? Okay, I'll cover commodities at the end. All right. So let me just do the last index, Nikkei, and then I do FX and I cover a bit of commodities. Okay, so let's go to the Nikkei chart. Okay, for Nikkei chart, oh my god, we've been stuck in this range for the whole year. Thankfully, something happened. Nikkei chart looks bullish already. Okay, but just a key resistance around the 17,008 to 18,000 level. This is a weekly chart. Key resistance. Okay, but weekly looks bullish. Daily chart looks very bullish as well. Okay, it seems Donald Trump is going to save the world. That's why all the risk is risk on mode. But yeah, so daily chart is bullish, weekly chart is bullish, good to the upside. Let's see whether we can plan a trade. So the key resistance, right, is around this level here. Actually, we are somewhere there. Okay, if you look at the support here, a false breakout resistance, we're somewhere there. So I wouldn't like to plan I wouldn't like to plan any longs anymore here, even though I'm bullish, because it's too close to resistance. What I like to do is go to the lower time frame. Okay, first level of support is probably around here, 17,550 and 17,005. Now, Nancy, tomorrow, right, if the market comes down to this area here, okay, pay attention. If I go to shorter term charts like 15 minutes, if it start turning up, there's a chance that we might make a push the previous high around 17.7, and there you can take some profit there. Okay, so this is the first level it might react to. Okay, the whole market is reversed. It is on uptrend around 17,005 to 17,550. This is the first level of support it might react to. Okay, going to lower term time frame, 1 hour chart. 1 hour chart is just drifting. So I'm very keen at this area here to see what happens, because the daily chart looks very bullish, 4-hour chart looks bullish, good to go to the upside. It just there's not much meat left if you're going to take your longs here. Okay, I'm very keen to see what happens closer to the 17,005. Okay, Nancy? Okay, I'll do a last one, HSI. Ing. I did a down earlier on. Not to read when my marketing do the recording and upload it, you can watch it again. But the Dow is definitely good to the upside. Okay, the Dow Jones is definitely good upside. One of the most bullish index out there. Yep. Let's do the Hang Seng. Hang Seng right now. Okay, so if you look at the Hang Seng, okay, Hang Seng, it's a bit nifty. Yeah. Hang Seng is bullish. I mean, this is a higher high, higher low, and right now this level here. Let me just draw a line. Zoom out. This is a weekly chart, yeah, Hang Seng. Okay. The level here at around 21,800 to 22,000, that is a key support level. You can see the trendline support, you can see horizontal support, and you can see a lot of whole number psychological support around the 21,800 to 22,000. Okay, so Hang Seng weekly chart, we are at support. Daily chart still in a downtrend. Well, it looks really much like the Nifty actually. Okay, still very much in a downtrend. It is approaching the key support level. Are you looking to buy or sell, John and Kunath? No, as in what? You're looking to buy or sell? As in, Oh, just watching. Okay, just watching. I would look around the 22,000 to 21,800 to look for opportunities to the upside. Actually, it's not there yet, so I'm just being patient. Okay, because the weekly chart is still pushing, is at support. Daily chart is coming down. Let's look at the 4-hour chart. Kuna, you're looking to sell, is it? Okay. Okay. Just be careful, yeah, Kuna, because looking at the 4-hour chart, right? If you told me that you're short around the previous highs here, fair enough. But looking at the 4-hour chart, you can see that it's quite bottomish already. Okay, kind of a triple bottom kind of scenario, which means that the 4-hour chart is quite tired of moving downwards. Okay, as compared to here, it keeps making lower low, lower low. But right now, you see from the election period all the way till the past few days, it looks very bottomish and it's close to the psychological support 22,000. So even if you want to sell Kunaf, at least let it break this level clearly first. But when you sell, right, I would say keep it short term because anywhere between 21,800, 22,000 is a key support level. Okay, why do I say that again? Because if you zoom out a weekly or daily chart, you can see that this is the levels, all these kind of resistance and support levels are coming up. Okay, Kunal, so if you want to short, I would say let that 4-hour support area break first, around the 22,150 level. You must let it break first because it seems that it's going to be supported. For all you know, it might push high from here again. Okay. All right. That's it for indices. Let me move on to FX right now. I'm going to take a 10-second pause and then I'll start with Aussie dollar.